Kevin, we got the Fed rate cut, but for whatever reason, rates seem to be rising. And it looks like the unemployment rate went up. The real question is, are we headed for a recession? And what does this mean for future rate cuts? Are they next month? What's going on?
I love the question, and I'm getting it a lot lately. What we're seeing is data is starting to dump. With regards to the Fed cut, I think they cut in December based out of political pressure. I don't think there was really any significant reason. We had been 2 months with no data, but we saw a job dump. We had non-farm payrolls. They came in, they were higher than expectation. We had the participation rate that came in actually strong as well.
Is that like a participation ribbon in this case, though?
Yes, exactly. It's a ribbon. He won't wear the ribbon. Then we had unemployment, and unemployment came in at 4.6%. As that number creeps up and you start getting up around 5%, those are signs of recessions. I think we're going to get one cut out of the Fed during that time because the labor market, the lagging indicator, is really going to pick up steam. Fingers crossed, however, that inflation actually either remains stable or starts to come down a little bit. And are we headed for a recession? I say yes.
I'm going to grab my lucky 8 ball.
Okay. Yes.
Honestly, if the Fed gives us rate cuts, the only thing I really care about at this point, and for the purposes of our show, is how's that going to affect mortgage rates? That's at the end of the day what I care about.
And honestly, I just talked about it. AI is a big animal in the room. There's a lot of anticipation that it's going to make businesses much more profitable. It's going to allow them to streamline. And I think in the background, that's playing into why treasuries are not that sexy. They're just not. It's a 4% rate of return. You can go chase AI returns at 10, 20% plus. I think that's why we're not seeing interest rates move, because the Fed doesn't affect interest rates. They affect the Fed funds rate. The 10-year treasury is what we're really after, as you just said. And that really hasn't moved that much.
And there you have it.